Hey, what is up, dudes and dudettes? This is Diligence here, and today I'm gonna talk about some of the mistakes I made in the past few days. Everybody on Discord and on Patreon knows that I made quite a lot. Well, technically, I made my monthly rent payment from trading Tesla options, but I literally stopped when it reached like 990-ish, and then I just stopped. And I think that's a mistake for me. I think I know that in my head that when it's at 980, I know it's gonna rush for 1,000, and probably will be a good idea to sell it at 1050. But a part of me was thinking, okay, so when Tesla reaches $1,000, its market cap's gonna reach $1 trillion, which is probably gonna be the sum of a couple of small countries in, I don't know, sometimes in Europe, in South America, and all of that. And in order to sustain that kind of market cap, you sort of need to sell cars with the same amount of... The problem with Tesla is not that Tesla is not a promising company. On the contrary, you have to know that, hey, I'm a fan of Tesla, I'm a fan of Elon, and also I'm a fan of, the Tesla stock in general. But there's always a general pattern when it comes to, there's a difference, right? There's a difference between innate justifiable growth versus what we call meme growth. The difference between those is meme growth has a short-term, short squeeze aspect, and meme growth does not sustain itself. Okay, and the thing is, all of those are natural growth. And if you are an analyst or if you working in financial institute, our projection, or basically all of our, price projection analysis are based on fundamentals. So if you look at the fundamentals, when it's at $900, or technically speaking, when at 790, I call it's gonna be around 800, and it's gonna jump to 850 at least. And then on the other day, I made another video about Tesla is doomed to go to $900 and even over, right? But the thing is, when it reaches $900, as a regular option investors, we face two dilemmas. Option investor or option traders, we face dilemmas, okay? Here are some dilemmas that we face. We know that, hey, we have a higher probability that stock will go from 900 to 950. But what is interesting is Tesla actually endured a gap up, right? It had a gap up from, it literally went from 900 to 950 in overnight. And then we see a lot of aftermarket movement. And then now when you were a legit investor who's been doing this for a long time, or a trader, you realize that at 950, there are a lot of people's position at $900. So what happens is there are a lot of $900 call sellers and call buyers, okay? And then when it reaches 950, there are a lot of people start rushing in, start buying 950 options. And when you started buying 950 options, that means the old at the money options are actually overpriced. So because I am a deal seeker, for me, the minimum investment size just went up. Why? Because it's literally like a supply and demand curve, right? When people start FOMOing, say set amount of options or options at X strike, you wanna either go opposite of that direction, or you wanna buy options that are a bit further out of the money. Now it goes to our main topic today, is why did I not buy the $1,000 call option the day before today? Well, truth to be told, I was facing a liquidity problem where I'm sort of foreseeing Tesla and Amazon have a runner up today. But the problem with buying options by the end of a Monday night or in the middle of a Tuesday is, historically speaking, on Wednesdays, usually there are important announcements to be made. And most of the time, NASDAQ actually correct on Wednesdays. And usually meme stock actually go up on Wednesdays. Well, meme stock short squeezes. That means if on a Tuesday and on a Monday, the NASDAQ have a significant runner up like what we see here, right? It's literally at all-time high here, okay? We're talking about decades of NASDAQ running up and down and running up and down. And then now a lot of investors are thinking, hey, like, is it too much? Is it already too much? Because when you look at when NASDAQ reaches 460, that's basically implying our economic growth exceeds the amount of inflation expectation. What does that mean is, we don't, if NASDAQ keep going up, and then if we don't have inflation confirmation data coming in, that literally just means, hey guys, like, we think the inflation is actually gonna change its course, which in this case it's not. Therefore, it has to have a short-term correction unless we foresee a short-term correction on the oil. But the problem with short-term correction on the oil is the US oil supply cannot sustain the US oil demand. And the next OPEC meeting is literally in the middle of November. And in the middle of November, there are a lot of key dates here. We will see the taper news coming out, which I think taper is actually going to happen. Why? Because if you look at all of the banks rate and look at all of banks probability and the yield curve in the long-term end, you will realize that, hey, the taper adjustment already happened. So all they have to do is just announce that taper is going on. And then, in about a month-ish, taper will be completed, actually. Because a lot of preparation work or the grunt work already been done in the past 2 months when the taper talk or the scare is coming in. And then just coincidentally, all of these bank stocks already have a run in the past 2 months. You see this? So right now, one of the reasons to long bank stocks is that we sort of expect a tapering to go as expected, and we expect a tapering on an aspect of the economy to really draw the long-term yield curve on the further end to tip up a little bit more. Just 1 degree of the ticking up will actually increase the probability of any banks. But the problem with constant growth in the US market is a constant SPY growth will actually enhance the inflation effect. Why? Because the true growth every single year of your portfolio is basically, now in the US, we're measured by the index funds, the index fund growth minus the inflation growth. The interesting part of inflation growth is right now we have a very sustained accelerated inflation growth, and then that sort of feeds into the nominal increase in in stock returns. And if you go back and look at oil, you'll see that this runner up, if we actually adjust this runner up to a slope estimate and then we peg it to the SPY, we realize that the true SPY value is actually less than the Sharpe value. The true SPY value is actually almost at the exact point of the previous all-time high. And then we're actually struggling. So, what's most likely going to happen tomorrow? Probably going to be a correction. But hey, I mean, a lot of people still have a lot of stake in the NASDAQ and SPY. Therefore, if you see a NASDAQ or SPY start trading flat, that's normal. And then we won't see a further run up unless we foresee another earnings season to be this great or other things, really. But there's no real catalyst going on extending to next week. Next week there's only bad news. So what I've been doing is I've been contracting my positions. But when I'm contracting, I made a really greedy mistake. So here comes the mistake part. I don't think not buying the $1,000 call option on Tesla, which will probably make me about $1,000 on a day anyways if I day trade those options. What I really want to learn from is today's mistake. Today's mistake is actually on Facebook. Well, here's the very interesting part about Facebook. We all know that yesterday I hold the 325 Facebook call options and I made about $400 on that call options, but I made a rookie mistake by holding on to that than actually selling it. Why? Because when I see the aftermarket movement, the Facebook actually went to 342. And then I was like, oh my God, today we're going to see a fill in the gap movement upwards. But guess what? Sometimes life just plays a joke on you. Why? Because Mark Zuckerberg actually acquired some of his $0 cost basis derivative and start selling his own Facebook stocks, which induced this huge drawdown today, about $10 drawdown. And for those of you who are familiar with options, we trade options. Why? Because we have innate leverage within the options. And then when you see a option contract decrease by $10 on a blue chip stock, that's literally 50% or more than 50% loss on the day. I actually sold my position, closed my position about 326, and I basically lost $200 on this option instead of making money. Okay, so this is one of the mistakes I made. There's another mistake I made is I started buying the 37 call options on AMC way too early. The very interesting part about AMC is AMC usually tends to move on the opposite direction of where the market goes. When the market goes super high, it goes 1 or 2% increase. But when the market isn't that great, the meme stock becomes a rally point for all of the degens, including myself, that want to see a abnormal return on sort of like a behavior cue. So when you see a charting pattern like this, we know that, all right, by the end of the week, we probably will see a $37 no matter what. But as an option trader, you're actually trying to leverage yourself, you're trying to leverage the risk of theta decay with the price appreciation. So the correct buying point is actually either tomorrow or the day after, depending on the at market price of AMC options. Okay, this is the second mistake I made. And the interesting thing about today is I also made a third mistake is, let me show you the stock. PayPal. Well, the interesting about PayPal is I probably should have made this into a separate video. But we all know that PayPal merger or acquisition in this case for Pinterest failed, right? The PayPal merger or Pinterest failed, which means we have to reevaluate how much PayPal will actually worth. If they're worth at $239, probably this is a little bit undervalued. But the thing is, if you go back and look at PayPal's and Pinterest deal, you'll realize that if they actually buy Pinterest at $60, actually they want to buy it at $70. If they buy it at $70 and they're buying it with shares, that literally means their foreseeable downturn is they foresee their stock's fair value at at 236. I have all of the calculation in my notebook. If you guys want to see some very interested or very detailed calculations, I can show you guys in a separate video if you guys are interested. If you want to see that kind of content, comment down below. And if we see, let's just say we have 5 comments, more than 5 comments I want to see that, I will post that video. So right now, my understanding of yesterday is, okay, we know that it probably is the true value of PayPal is probably worth 236 to about a 245. So if we look at the price, then it's probably safe to buy the 245 call option. But guess what? I was wrong. Why? Because in today's entire SPY upwards movement are all based on Tesla and Apple and Amazon. But the thing is, a lot of investors are seeing this sort of slowing down of the momentum. And the thing is, a lot of people's money are in Tesla. And then when they start selling, the SPY is actually going to drop. So if you think I've been talking shit and talking nonsense for the past few minutes, then just remember this. I foresee a VIX spike in the next 2 days, and I foresee a significant correction of NASDAQ by the end of this week. Okay, this is my prediction. And again, we're not financial advisors. We do not give financial advices. Everything we say on this channel is for shits and giggles, okay? And yeah, this is it for this video. I mean, it's not surprising that SPY will keep running, but at this point, the slope is too sharp to an extent where it's time for a correction. See you guys on the upside.